delighted to be joined today by David Lifchitz and Anton Golub. Welcome, gentlemen. How are you today?
Doing well, thank you, Nisa.
Yeah, doing very well from the virtual Zurich in the back, so doing awesome.
So when looking at structuring a fund for traditional assets, what are the key factors and metrics you look at before you begin, and how do they migrate to digital assets? David?
Actually, digital assets are an interesting asset class because contrary to traditional assets, they are trading on a continuous basis, 24/7. There are no gaps, no overnight gaps or no weekend gaps, which is a lot on the risk management side. So that's basically a key factor to take into account when setting up basically trading strategies for these specific assets. So, and I know, Anton, that from the trading and execution point of view, you have a lot to say about the crypto as well. So I'll let it to you now.
Yeah. So thanks very much. I'll kind of like try to separate the questions that we looked at into three categories. Kind of the first one is the strategy and the infrastructure. The second one is like, how do you actually set up a vehicle that everything works? And the third part is how can our investors understand what we offer to them, you know? And now kind of moving to the first part, you know, as David mentioned, you know, it's 24/7. I came actually from the FX background where things were 24/5, you know? So definitely a lot more opportunities that we can capture. But speaking and thinking about the infrastructure and the connectivities that the exchanges have in the crypto or digital asset space, this is still inadequate and not at the level what we would see, for instance, in the FX or the equity markets, where we're talking about fixed connectivity, when we're talking about low latency matching engines, trading systems. That's not the case what's happening at the moment in the crypto space, digital asset space. Therefore, the strategies themselves cannot capture the opportunities that we would look at the millisecond basis in the FX space or the equity space. So this is kind of like the first challenge. Infrastructure and connectivity, that's not the level we would expect. The second part is talking about the structures. You know, I can tell you the pain that we had when we had to explain to those trading venues what is it we're onboarding with them. That we tell them, look, we're onboarding a Cayman fund with you, or we're onboarding actually a structured product out of Guernsey with you. They just don't have that experience of onboarding this kind of products. And many times it's like a back and forth discussions, like what is it that we're trying to do? Why are we not trading on our own account? And why are we not like the typical retail trader that I might see, you know? And then the third thing is, so the third thing, if I have to explain, is our investors, you know? How can an investor understand what just David mentioned is that crypto world is 24/7, you know? And maybe they have their colleagues, you know, they're on a boat somewhere in the Lake of Zurich, and on Sunday, their friends tell them, hey, did you see crypto tanked 30%? And they would tell them, what do you mean tanked? It's Sunday, markets are closed. And they would tell them, no, they're not closed, they're open, and it's moving all over the place, you know? So I'm illustrating certain problems, you know, but that's the kind of education that many times we have to do with investors to understand what they're getting themselves into, you know?
So what strategies have been easiest or most obvious to apply in crypto assets?
Mm-hmm.
From my point of view, essentially mid-frequency trading strategies have been the easiest to adapt because, as Anton said, the infrastructure, the market infrastructure is not ready yet for high-frequency trading. And in terms of behavior of the crypto, there are still kind of illiquid versus traditional assets. So the trends tend to last longer than traditional assets. So all the, I would say, trend following or mean reverting strategies tend to do well in that environment for that asset class at the stage that they are right now. But just a few years ago, when they were even less liquid, it was even harder for them to trade them. But now with more liquid products, options, and futures on these assets, it makes basically it easier to apply, we say, essentially CTAs kind of trading strategies, and also market neutral market making strategies are basically developing right now. But we are not yet at the point where what we can find or what we can do with the traditional assets, especially in terms of execution and ultra high frequency execution.
Yeah. I would just second, you know, here what David mentioned, that it's mid-frequency, and also I would actually add that we found it, given our experience on the fully automated side, that maybe discretionary strategies are a bit more easier to deploy because of the fact that the connectivity and the infrastructure is sometimes a challenge with the trading venues. So I really second everything that David said in that regards. Yeah.
So speaking of risk management, how do you deal with potentially fake volumes on exchanges?
Yeah. So I can kind of share experience with regards to fake or ghost volume, how we see it. And indeed, I mean, this has been somewhat of an issue actually with the digital asset space, that there's this ongoing team and discussion around there's a lot of fake volume or just non-existent one, and the volume numbers that you see being reported are not representative of what's actually happening. So kind of have to actually relate to it from a investment manager perspective. Is actually those fake volume is actually, you can identify it quite easily, and then you can shy away from the exchanges that do this kind of practice. But we always kind of wonder, how does it reflect actually when it really matters, you know? And I'm talking about here highly volatile situations, you know, where the markets move a lot. And then the question is like, from all this fake volume that, you know, all of a sudden isn't there, you can't do anything with it. Then the question is, where can you actually go to trade, where this highly volatile environment, and where you realize that the fake volume, these fake numbers don't actually help you at all. And you actually realize there's only 1 or 2 trading venues that, when the markets are extremely high, that really show solid liquidity.
So it's clearly easier to manipulate smaller cap cryptos. Any tricks that are being deployed that might be considered illegal in more regulated markets?
Yeah. Go ahead, Anton.
Yeah, so it's very, you know, first to say is there is no holistic regulation actually that mandates what's market, you know, surveillance when we're talking about crypto markets. So it's more like ways how to, you know, exchanges and the investors and traders that traded, they try to identify certain, you know, funny things that happen. But I'll give you an example that was always mind-blowing for me, is that I would see, you know, an exchange would have fees, you know, attached to it, and I would see a spread tighter than the fees, you know, and I was always wondering, like, who is there, you know, showing that tight spread, you know, if the fees eat up the profits from the spread, you know. And you can kind of see easily stuff like that, so you understand there are actually deals happening in the background that enable this kind of activity. And then you wonder, okay, who is this? If somebody has special terms, who is this special trader that has these amazing terms on a particular exchange? And many times it's the prop desk of an exchange in the back that does this kind of thing. So I kind of explained here in a colloquial example. It's like, you don't really have market surveillance mandated. Then on the side, you see things that kind of don't make sense when trading happens. And then maybe you have conflict of interest actually, because there's a single counterparty actually doing too many things at the same time, you know? So I would say the prudent way how to do it and how we approach it from an investment manager perspective is actually to do a very thorough due diligence on an exchange. Therefore, in the end, flovtec trades at a very few exchanges, because we would just not get ourselves involved with an exchange where, you know, they're the counterparty to all our transactions, you know. So it's really hard to say it one word. It's like thorough due diligence when you have there's the tough questions. And if the exchange cannot answer the tough questions, you just don't trade there. It's as simple as that, actually.
We have seen actually two scams. That one was basically the pump and dump of the Dogecoin, when basically a couple of a few weeks ago, some were tweeting that basically if everybody was basically buying a small portion of Dogecoin, the coin would jump. And this is basically what it did. But then the investors, or I should call them investors, basically the fools who played that game, were basically the one holding the bag when the initiator of the trade decided to sell. And so they were stuck with basically a declining price. So it's a classic pump and dump schema. What we have seen, I think it was early September, there's been a sort of flash crash, if you want. The Bitcoin that went down like 10 or 15%, and Ethereum went down 20% in just 5 minutes. And that could be definitely done when the markets are nearing a technical point, either a moving crossover of a moving average crossovers, or if you are crypto hitting resistance or very close to a breakout level. And then you can basically, if you have enough basically size to trade, you can build stealth position on a crypto. So you buy, and then when you have built a big enough position, you just buy some futures. So you sell some futures on that same position stealthily, so you won't be basically push the market downward. And then at some point when you are loaded on short futures, you just drop in a market order a big chunk of your coin in the spot market. That would basically put pressure on the order book, and so your order will basically hit all the ask, and in this case, sorry, the bids, and then you basically push down the market. But because you were short the futures, you are basically making money on the move that you was the one who triggered. You know what it was doing, and then you cover your shorts when you're at the end, and then basically you have basically made a nice profit by manipulating the market. This is totally illegal with traditional markets. As Anton said, there is no policy for crypto markets so far. And so it's still the wild, wild west in crypto trading. That used to be trading in the early 80s or before in the bucket shops. And basically we see right now in the crypto markets what the traditional assets were trading in the early 80s.
Anton, what about DeFi? Are you participating in any staking or secured lending?
Yeah. So first, to tell very honestly, I'm a huge fan of DeFi, and whatever, you know, a lot of the things that are happening in DeFi space is exactly how the world is going to look like 20 years ahead. Now, the problem with DeFi is when you're running a compliant and regulated entity is that, you know, we have to answer questions like how, you know, who is the counterparty? Can we do due diligence on them? You know, how are they actually managing the assets? And when you take a closer look at DeFi, they're really built at the moment for retail. So people who really take risk with their own money, and usually not a lot of money, and then they're experimenting around it, you know. So I think it's a fascinating space, you know. We are not ready for it, you know, as a compliant and regulated, we cannot go there. It's just not the right time. But I will actually mention a couple of projects that for me, I think are mind-blowing. And when, you know, they improve a little bit or when they take the next step, we're definitely going to look closely into it. One is Melonport, actually. So Melonport allows you to create a fund with the click of a button, you know. And David and I myself know how painful and expensive it is to set up a fund. So, I mean, what Melonport is doing is the future. And that's exactly how it's going to be. You know, you are going to show up, you'll say, I'm an asset manager, let me click a button and create a fund, and whoever wants to put in there, you know, they can put in the capital. It's going to be a regulated collective investment scheme, all great, you know, but we're going to get there. The other one for me, a mind-blowing project for a specific reason is actually Uniswap. And I will tell you why. Because Uniswap showed that you don't actually need an exchange. Because if you think about it, Uniswap is like a global market maker, you know? So this is mind-blowing because all of a sudden you realize all of these big exchanges that are the gatekeepers. So you're a project, you want to list your token. The exchange is the gatekeeper. They tell you if they will list you or not. But Uniswap works is like you just say, well, I put my token there. There are two pools, you know, actually, that are going to be references actually how we're going to create a cross. In Uniswap, there is even a very simplistic way they enable exchange one asset from another. And it's mind-blowing for me to show actually that in the future you will have, hopefully, and that's why flovtec exists, you will have actually market makers that will be, you know, doing all of these trades and actually will not need an exchange actually, if I'm right about the future. So this is kind of things that are fascinating for me, but to be very honest, a regulated compliant entity cannot easily enter this kind of opportunities. So mostly prop shops and people who risk their own money.
And David, what's keeping you up at night that hadn't kept you up in traditional markets?
I would say that what is really the known unknown in cryptos is really about regulation and what the governments can declare overnight as a new regulation. And let's say that I don't know, if overnight large country decide that trading crypto is not legal anymore, or because they eventually made up their mind and that some cryptos are financial instruments and so they should be regulated as a traditional financial instruments, and that all the asset managers have to comply the next 30 days. That would definitely be a nightmare on the whole industry, and lots of projects would basically go under because they don't have the resources to finance all the compliance. There are all the law firms and the legal teams are not really aware of what would have be needed to comply with. So that's really the biggest risk for me is not in the market, because it is still a native and a young market, highly volatile, and so you take your risk, you know what you're doing. Especially in DeFi, as Anton said, that's really now basically the early beginning, and so you have to trade at your own risk. But this is really what could really throw a monkey wrench in the whole ecosystem right now, is a tighter regulation coming overnight, or almost overnight, I would say.
Anton?
So just want to say first, I definitely agree with David. There are a lot of risks, that we need to address actually to deploy capital in a safe and secure way. So I just want to, emphasize this is highly important, and that's why we have sleepless nights, all of us. So, but I will play the devil's advocate here. And actually, if I have to say, is actually the biggest, worry for me would actually be if tomorrow all the regulators and governments say Bitcoin is the future and we're all going in, and tomorrow we have Goldman Sachs and JP Morgan competing against us and recreating the same mess they created in the traditional finance. That's why, the digital asset world exists, recreating the same thing in the digital asset world, and then all of a sudden we have to compete with all these huge players, and the world will look a lot different, from one day to the other, So if I have to explain it, I think that this young and very early stage where we are, it's a big opportunity for startups like flovtec, like ExoAlpha and a lot of others. We can really recreate the financial infrastructure and the financial world in a very positive and future-oriented way. So I think there's a big opportunity, but there's risk, all of a sudden, actually, if everybody says this is the future, all of a sudden you're competing with huge entities, and we are small, poor startups, how are we going to compete with Goldman Sachs so easily, And maybe we have our own ideas how the future would look like, but they don't share the same views. Or the dream would be that we all actually agree and hold hands and say, we see a bright future and let's build everything in that direction. So I'm playing a bit of a devil's advocate here, but I think the early stage that we are now is a huge, huge opportunity for us, And the longer, the people are waiting on the sidelines, the better actually it is for the digital asset world and for all these amazing smart ideas like Melonport, like Uniswap, like Compound. I mean, they can experiment, do an amazing work, and something will come out of that that will be, a foundation for the future of the financial world. So playing a little bit of devil's advocate here, and now going back to the risk that David said and say that, but we are where we are, and there's a lot of complexity if you want to actually be an investment manager and do it in a regulatory compliant way that, are keeping us up at night.
Well, great. Thank you both so much for being with us today. And we will have to have you back soon and see what transpires.